Have you ever wondered why some Americans pay over $2,000 a year for car insurance, while others with similar cars pay hundreds less? The truth is, most people are overpaying for car insurance without even realizing it. Insurance companies use dozens of hidden factors to calculate your rate. And if you don't know how the system works, you could end up spending thousands more than necessary over the years. In today's video, we're breaking down the exact strategies smart drivers across America use to save serious money on car insurance, legally and safely. And some of these tips can lower your bill almost immediately. Let's get started. First, one of the biggest mistakes people make is staying loyal to the same insurance company for too long. A lot of drivers assume that loyalty discounts will keep their rates low. But in reality, many insurance companies slowly increase premiums over time because they know most customers won't shop around. That's why smart Americans compare insurance quotes every 6 to 12 months. Companies like Geico, Progressive, State Farm, and Allstate all calculate risk differently. One company may quote you $1,200 a year, while another offers the same coverage for $800. That's a huge difference for the exact same driver. Experts say drivers who regularly compare quotes can save hundreds every year without changing their driving habits at all. The second strategy is increasing your deductible. Now, if you don't know what a deductible is, it's the amount you agree to pay out of pocket before insurance covers the rest after an accident. For example, if your deductible is $500 and repair costs are $3,000, you pay the first $500 and insurance covers the rest. Here's where the savings happen. Drivers who raise their deductible from $500 to $1,000 often reduce their monthly premium significantly. Of course, this only works if you have emergency savings available in case something happens. But for many Americans, it's one of the fastest ways to lower insurance costs. Next, let's talk about credit scores. Most people don't realize this, but in many U.S. states, your credit score affects your car insurance rate. Insurance companies believe drivers with higher credit scores are less risky, so they often offer them lower premiums. That means improving your credit score could actually help lower your insurance bill over time. Paying credit cards on time, reducing debt, and keeping utilization low can make a noticeable difference. Another major factor is the type of car you drive. Luxury vehicles, sports cars, and high-theft models almost always cost more to insure. For example, insuring a high-performance sports car can cost double what you'd pay for a reliable sedan. This is why many financially smart Americans research insurance costs before buying a vehicle. Sometimes a cheaper car payment doesn't actually save money if insurance premiums are extremely high. Now here's a tip many drivers ignore: bundling insurance policies. Insurance companies love customers who buy multiple policies together. So if you combine your auto insurance with home insurance, renter's insurance, or even motorcycle insurance, you can often unlock large discounts. Some drivers save up to 25% just by bundling policies with the same provider. And the process is usually very simple. Another powerful strategy is taking advantage of safe driver programs. Many insurance companies now offer apps or tracking devices that monitor your driving habits. They track things like hard braking, speeding, nighttime driving, and phone usage. If you drive safely, you can qualify for additional discounts. Now, some people don't like the idea of being tracked, which is understandable. But for safe drivers who don't drive aggressively, these programs can lead to substantial savings. Especially for younger drivers. Speaking of younger drivers, adding teenagers to a policy can dramatically increase insurance costs. But there are still ways families reduce those expenses. Good student discounts are one of the biggest examples. Many insurance companies offer discounts for students who maintain strong grades in school or college. Completing defensive driving courses can also reduce premiums. And in some cases, staying on a parent's insurance policy is much cheaper than buying a separate one. Now let's discuss mileage. The less you drive, the lower your risk of accidents in the eyes of insurance companies. That's why low-mileage drivers often receive lower premiums. Some Americans who work remotely or rarely drive now use pay-per-mile insurance programs. Instead of paying a large fixed premium, they pay based on how much they actually drive. For people who only use their cars occasionally, this can save a lot of money every year. Another mistake drivers make is paying for unnecessary coverage. If you own an older car with low market value, carrying expensive full coverage insurance may not make financial sense anymore. At a certain point, the cost of coverage can become higher than the actual value of the vehicle. Many financially savvy drivers review their coverage annually and remove options they no longer need. But this depends on your personal situation, so always understand the risks before reducing coverage. Now here's something extremely important. Never let your insurance policy lapse. Even a short gap in coverage can increase your rates later because insurance companies may label you as a higher-risk driver. Continuous coverage helps maintain lower premiums over time. So even if you're switching companies, make sure your new policy starts before the old one ends. Another powerful strategy Americans use is simply asking for discounts. You'd be surprised how many discounts insurance companies offer that customers never claim. There are discounts for military members, federal employees, teachers, students, safe drivers, anti-theft devices, paperless billing, automatic payments, and more. Sometimes all you have to do is ask. And finally, one of the smartest financial habits is reviewing your policy every single year. Life changes. Maybe you moved to a safer neighborhood. Maybe your commute got shorter. Maybe your credit improved. Maybe your car is older now. All these factors can impact your insurance rates. But if you never review your policy, you could continue overpaying year after year. The bottom line is this. Most Americans are paying more for car insurance than they need to. But the drivers who understand how the system works, and who take a few smart steps, can save hundreds or even thousands of dollars over time. So before you renew your next policy, take a few minutes to compare quotes, review your coverage, and check for hidden discounts. Because saving money on car insurance doesn't require luck. It just requires knowing the game. If you enjoyed this video, make sure to like, subscribe, and turn on notifications for more smart money tips, finance strategies, and insurance hacks that can help you save thousands every year. Thanks for watching, and we'll see you in the next video.